On the public in South Korea, its prices keep rising and economic conditions at home continue to worsen. Consumer sentiment dropped in May, while public expectations of future inflation also hit a near-decade high. Lee Ji-yoon with more.
South Koreans are feeling the squeeze at grocery stores and gas stations. With rising prices, the public's expectation of future inflation rose for a fourth straight month in May to reach its highest in almost a decade. The Bank of Korea's monthly survey of 2,500 households showed that South Koreans expect consumer inflation to average a median 3.3% over the next 12 months.
And you said that the Fed will be the unicorn slayer. Break that down for us.
Oh, sure. Yeah. So what we've seen is an inflation shock that has led to unprecedented rate volatility post the GFC, which has led to, really challenging environment for risk assets across the board. And so what we've seen is rising rates have led to high flyers in my market like Uber and Carvana. They're pivoting from growth to free cash flow, or a Coinbase that's focused on limiting cash burn. And so these companies have to right-size their employee mix. And, I think we're going to see further layoffs. They're going to be fast and furious. And this is going to have broader spillover because tech companies spent over the last decade. And now finally the bar tab's coming due. And we're going to see, and we've already seen a meaningful wealth destruction in this part of the marketplace. A lot of these employees were deep in the money on equity options 9 months ago. And now they're wondering about layoffs. And, if you look at the convertible bond market as a proxy here, many former Wall Street darlings, companies like Affirm, Beyond Meat, SoFi, to name a few, they're trading like they have serious bankruptcy concerns.
Well, with the world's elite gathering in Davos, Switzerland this week, a bit of a reminder that the COVID pandemic has left the picture on poverty dramatically worse than it was pre-pandemic. This chart comes from the World Bank, and it shows the number of people living on less than $1.90 a day. And it shows that there has been a rapid undoing of the pre-pandemic progress made on eliminating poverty. World Bank estimating that 56 million people more thrust into poverty as a result of the economic shock, something that I'm sure a lot of the world's leaders and big CEOs will be talking about. But of course, Akiko, as is always the case with Davos, whether or not there's any action on that is another question.
It's really hard to measure that action, any kind of promises that are made at Davos. But, it's interesting to see this. I mean, we're talking about it compared to pre-pandemic levels, but over the last several months, we have seen additional factors only add on to this, right? When you think about what's been happening between Russia and Ukraine, grains, wheat that's grown there, how that has really started to... Food insecurity is huge. And then now we're hearing about these extreme heats over in India. They have started to limit their imports as well. So you look at that chart, that's where we stand now. And you have to think about just the pile-on effect beyond that because of so many other factors that are now coming to play.
Yeah, we have to remember, too, that during the pandemic itself, nations that had good standing economically were able to pass stimulus measures to keep businesses and households whole. And a lot of third world nations that were already very fragile before the pandemic, they didn't have that same luxury. So
they have a bird's eye view. Do you find it a good time to keep seeing those credit card borrowings expand at a time when a lot of consumers are feeling crimped by inflation?
So let's pull back and just look at it overall. So there are a couple key points. Number one, the account balance of the consumer pre-pandemic to now are multiples bigger. So a person had, 2,000 to 3,000 average collected balance in accounts. Now has, and that would have been about 1,400. 1 to 2,000 would have been about 1,400. Is now almost $4,000. A person that had 2,000 to 5,000 would have about 3,500 on average. It now has $13,000. So just step back and think about it. It grew 5% in the month of April from March. So what you're seeing is consumers have more money in their accounts. The idea that they spent the pandemic money that came in January, March last year, just not true. Now, the second question is they pay down their credit card balances. From 100 billion we were down to 70, it's back up to 80. Lots of borrowing capacity. The third point is, are they spending? And that's what's interesting. In the first 2 weeks of May, the consumer spent 10% more than they did last May. That's over top of the payments that went out to pay taxes. So the consumer is spending, and people say, well, it's inflation driven. 8% more transactions. Somebody doesn't use...
I don't want to interrupt because we're going to extend this to 45 minutes. This is the real Moynihan, guys. This is the bank nerd giving us the operational stuff here.